for today's session. Welcome all the participants to today's session. Today's session will be conducted by CA Rajesh Kumar TR, and we will actually be speaking. He will be taking us through latest developments in GST and case laws of GST. Before I do the speaker's introduction, let us play the motto song of ICAI.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता
Thank you, coordinators, for the AI motto song. And welcome back, participants. I'm sure now we have been oriented in the right direction to listen to the case laws as well as have a better understanding of the recent amendments in GST. It is my proud privilege to introduce CA Rajesh Kumar TR. We all know that every practicing professional as well as students who are pursuing professional course, they should be able to find, read, analyze, and interpret the case law. Under the common law principles of stare decisis, a court must follow the decisions in previous cases on the same legal topic. Therefore, finding cases is essential to finding out what the law is on a particular issue. And today, we have CA Rajesh Kumar TR, who has done extensive analysis of these case laws, and he is bringing to us a bouquet of case laws for our better understanding, for bettering our understanding of the law. So let me just introduce CA Rajesh Kumar TR. He is a graduate in commerce. He's an LLB. He's a FCA. He's a DISA, and he has been practicing in indirect taxes since 2022. So he has more than 22 years of experience that he will bring to us and share with his knowledge today. He has completed his schooling, graduation, and articleship at Tumkur in Karnataka, and he later moved to Bangalore. He is practicing in the field of indirect taxes for more than 2 decades, conceptualizing the intricacies of businesses and law and advising clients on compliances, tax planning, representation to government authorities. He's the proprietor currently of RKTR and Co., which is his own firm. And he's also a partner at Venu and Vinay Chartered Accountants. He was one of the senior partners at Hiregange and Associates Chartered Accountants, where he created and he headed the litigation wing of that firm for more than 17 years. He has represented various clients in various states before various authorities, including Customs, Excise, Sestat, Settlement Commission, Anti-Profiteering Authority, and various other authorities. He has authored a number of books on GST, Central Excise, Service Tax, KVAT, and he is a joint author as well as assisting author in various other publications. To name some of the books, he has actually authored Handbook on Annual Returns and GST Audit, GST Ready Reckoner, GST Tariff, Practical Guide to Service Tax, Central Excise Made Simple, Central Excise Law and Procedures, and KVAT Audit Manual. Some of these publications are actually publications of ICAI, and I know professionals as well as students who have been reading the book will very well see the name of CA Rajesh Kumar TR. He has contributed substantially for compilation and revision of the study materials on indirect taxes, which has been published by ICAI for CA final students. He has also contributed on the background material on GST in India, as well as UAE VAT, which has been published by ICAI. He has been a member of the Indirect Taxes Committee of different trade and professional bodies. He has been training professionals as well as students, as well as industry veterans, and including the departmental authorities in the field of indirect taxes. And he has been invited to various organizations such as the ICAI, ICSI, NASEN, tax departments of state and center of different states, educational institutions, trade bodies, professional bodies. You know, he is an avid author. He writes many articles. He's a great orator also. So we now have the proud privilege of listening to his deliberations. Without taking much time, without coming in between participants and the speaker, I now hand over the session to CA Rajesh Kumar TR for his deliberations. Thank you.
Thank you, Kusum, for those elaborate introduction of mine. In fact, I think probably some points of my first slide you took off already. As to the state decision, etc. Anyway, I'm just going to present the presentation. Is it visible?
Yes, sir, it is visible.
Okay. Fine. Okay. I think firstly, before I start, I would like to thank SIRC for giving me this wonderful opportunity of sharing my whatever little knowledge I have got in the area of indirect taxes. In fact, the case laws under the GST law today, you would have seen today you open the morning WhatsApp group, you will find at least 3-4 different case laws, shooting into your WhatsApp messages. So you may be a little confused as to exactly what is happening. Today, a lot of case laws are coming, and many of these reports which do come will not be for final decisions. It may be some interim orders, whether there will be some comment given. The decision will be saying something, but what these messages will be telling something else. So I think before I get into discussing with the actual case laws, I thought it appropriate that we need to know about these case laws, how to look at or what to look at, to what extent we have to look at. So in that context, a couple of slides I thought I will deal with it. So then with that fundamental background, I think we can go with some of the recent case laws I think will have a relevance for this discussion. Then I will go on to the amendments. Rather than amendments, I would like to say it as a development or a changes which has recently happened through GST Council, which is 54 GST Council. But in and around that, I'll be also talking about what all is happening in the GST law and the changes. First of all, why do we want to look at the case laws? Isn't it enough for us to look into the provision act or the rules alone? Why we need to look into the case laws? In fact, there's a principle called stare decisis. There's a Latin phrase, basically, which means to say to stand by the decided matters. So there should not be a chaotic position by different authorities, different courts taking different views as per their understanding and analysis. So there should be some consistency in the law and the interpretation of the law. So the courts do follow this principle that there is already a decision taken by my peer, then I have to follow the same. I cannot deviate from it unless there is a valid reason to deviate from it. So that is where we need to look at it. So then we are, in other words, as the professionals, when we are representing our clients, while putting across our viewpoint, our submission, or our line of defense, we will take a shelter or we will use this case laws as a weapon to bind the authorities to give us a relief, considering our submissions made, considering our line of argument taken. So that is why we essentially quote or refer the earlier decided cases and use that as a law to bind the authorities to accept our line of argument. So that is where we go into the cases and see which of them we can quote. We should know there is also a constitutional mandate as to this concept of precedence, where Article 141 of the Constitution states that the law declared by the Supreme Court is binding on all courts in India. So, whereby the courts subordinate to Supreme Court has to follow whatever the decision rendered by the Supreme Court. So, considering that that also is a sort of a precedence or a binding things which all the lower courts has to follow. Now, many a times these authorities, officers, but they're really not courts, they're quasi-judicial authorities. So they're not really judicial bodies, but they behave like they're supposed to behave like a judicial bodies, unbiased. So they are also bound by these decisions of courts. When it comes to uh, which decisions a tribunal or authority should follow, because we have a Supreme Court and also we have a different high courts. Generally, I hear from our professional friends, sir, this high court decision which you are quoting or citing is not relating to our state, sir, so it is not applicable to us. Actually, that is not the way it has to be applied. Any decision of a high court is to be applied by all the jurisdictional authorities or the tribunals within falling under the jurisdiction of the high court. So they have no option. Even if they feel that they do not agree with it, they are bound to follow the decision of the jurisdictional high court. If there are two different high courts on the same aspect and giving a decision on that aspect, two are taking a different view, then the jurisdictional high court decision has to be followed by the corresponding tribunal or the authorities. If that high court which have taken such stand is not the jurisdictional high court, and there's only one high court which has come out and given such decision, then irrespective of which high court has rendered the decision, this law being a law of the entire country, the authorities or the tribunals are bound to follow the decision of the high court, irrespective of the fact that that is not a jurisdictional high court, if no other decision has been rendered by the jurisdictional high court. There may be a situation where there are two conflicting decisions given by two different high courts, and both of the high courts are not relating to the jurisdiction, are not a jurisdictional high court. Then what happens? In such a scenario, the authority or the tribunal may look into, they may choose based on their interpretation, unless there is already a decision higher. Say, for example, the appellate authority is deciding the case. Unless there is already a decision of a tribunal above the appellate authority, then only the decisions presently available are two decisions of different high courts, which doesn't belong to the jurisdiction, though it is not a jurisdictional high court, then the authority may choose one of them as is he feels appropriate to the facts of the case. So this is one of the things which we have to keep in mind. So while referring, how do we refer? Which cases we need to refer? Firstly, we need to look at the jurisdictional high court if there is no Supreme Court decision. If the Supreme Court decision, that prevails, no doubt at all. If there is no Supreme Court decisions and there is only a jurisdictional high court, then you have to follow jurisdictional high court, irrespective of these other decisions of the other high courts. So, and one more issue always comes up is the which size of the members have decided the case. Many a times, the cases are decided by a in a writ petition. Generally, in a writ petition, a single member may hear the matter. Subsequently, the appeal will lie before the division bench, or sometimes in some of the tax matters, the regular appeal will go directly to division bench. So, where there is any decision which is rendered by a courts with a larger members, larger judges, members constituted of it, then in such a situation, the larger court, that is a court with a larger members or the judges, will prevail over the judgment rendered by the bench with a lower number of the judges. Now, having said this, I also have to emphasize how to quote. We cannot simply, quote or cite or copy paste some decision and go ahead and argue the matter. What is relevant is a ratio or the formula adapted in that particular decision. What is this ratio? Basically, they give a principle. That principle, what is set out, is important and not the final order. Final order is given in that case. But what we are referring to is the ratio or the formula or the principle which has been adopted in that earlier decision is what we need to look at. We need to know, like, mathematics, one variable changes, the answer changes. Similarly, if the facts of the case changes, there is a chance that the outcome of the decision also will change. So, though the formula may be say that when the formula was adopted, it was on a given set of facts that decision would have been arrived at. So, if there is any change in facts, then we may have to look into the facts what was on which that decision was rendered, the law was applied to come out to a final decision, and whether the set of facts in the present scenario is similar, whether the facts of the present case will make any changes to the ratio which we are trying to quote or cite or adapt. So that is very, very important because we invariably find when the cases are quoted in some of the replies, they only see the head notes. They don't even look into the entire text, analyze and understand what actually the decision is, why the decision was rendered. So it is very important for us to go through the entire case law and not merely the head notes or for that matter only that underlined sentence and come to a conclusion. Okay. Now, similarly, if there's any change in law, because for example, the decision when what we are quoting might be under the provision which was unamended. Subsequently, if the provision is amended, then we cannot simply adapt the decision or the ratio given in the earlier cases. So we need to be clear, there's no change in the law for which we are referring to as against the references which we are making. Okay. Many a times, it may so happen, some cases have been decided, but the parties to that case would have not brought out either complete set of facts or complete provisions or some provision which is directly impacting the decision making is not brought to the notice of the court, or for that matter, some decision which was already rendered in the same context, which was binding on that particular authority or a court, was not brought to the notice of that court. And in such a scenario, if any decision is rendered, that decision cannot be used as a precedent because such decisions are called per incuriam orders. So, and the same can be distinguished or has to be distinguished and to see what is the actual position of law. So then you cannot use such type of case laws. These are something which I, out of my experience, have put across. Case laws has to be read in full, and it is not only the head notes or only a portion of the order without looking into the overall facts of the case. Sometimes quoting a case law without reading the complete facts can become a fatal to that case you are handling. In fact, if that case law, if it would have been rightly applied, it would have been the case actually opposite to the proposition what you might be taking. So it is very important before citing any case laws to read it completely and understand it and see whether that case laws is applicable to the facts and circumstances of the situation, and then only it has to be applied or referred, and not merely somebody cited it, somebody gave that in some lecture it was told, so we'll adopt it. It should not be like that. You have to read, and because you are the master of your own facts, so you know your facts better. Nobody else can know the facts better than you know in your case. So having known the facts of the case, when you read through the case law, then you will get to know that whether you need to use the case law or which portion of the decision you have to use and which portion of the facts you have to highlight. All those things will become clear and critical. Another important point I thought I will bring out in this discussion is about the references of other statutes. I mean, decided cases under the other statutes. It is if it's a decision given by the courts, especially high courts and supreme courts, there's nothing wrong in adapting the case laws rendered in other statutes into the GST law. For example, some decision rendered under the income tax law examining the scope and meaning of the term business in the course of business for the purpose of deduction in the income tax law. The same can surely be looked into to examine whether I can use those case law to make the expenditure, the taxes paid on those expenditures as an eligible input tax credit, because under the GST law also, the terms used are used in the course of furtherance of business. So we can always correlate the decisions rendered in other statutes also if it is relevant and it is going to be useful in your line of argument. At the same time, we should be also aware of the precedents in other statutes when we are looking in, especially the statutes which are governing that business. Say, for example, you are actually contesting or representing a case which is relating to real estate. Unless we have understood the legal proposition decision precedents under the property laws, maybe we may be falling short of the right approach which we have to take while filing our submissions. So I think the law relating to the businesses which we are handling and what is the judicial precedence in those laws has to be understood and studied, while it may be very helpful at times because the authorities, when they issue a litigation, their scope and analysis will be confined only to a particular line of thought process and not overall gamut, including the businesses. Just I will take one example which I came across recently. The issue was about a royalty. When I say royalty, the first thing what the authorities thinks is, oh, there is a liability under reverse charge mechanism. They look at my financials, there's an expenditure of a royalty. They just pick that royalty and they say you have paid a royalty, you're liable to pay tax on that under RCM. That is how it is going to be generally. But actually, in Karnataka, I don't know in other states, there is a practice which is adopted by many of the government departments that when any public works are carried out, like road, bridge, etc., such contractors in their contractors bill, they will deduct some amount as royalty and remit it to government. Those royalty are booked as expenditure. If we really see those things, actually it is not at all the payments made by me for giving me a license to extract ores or minerals or whatever it is, including a minor minerals. It is actually a mechanism which is adopted by the state to plug the revenue leakage, where they say if you are able to produce an evidences for the purpose of having paid a royalty on all your purchases, we will not deduct any royalty. If you are not able to produce those evidences, we are going to deduct the royalty and pay to the government. So effectively, it's a mechanism which is adopted. In fact, to validate this, in 2020, the minor mineral concession rules 2020, I mean amendment to 2020, they have added one provision also to this effect. But actually, in Rule 3B actually talks about the authority to give a licenses to the government or the authorities who are getting the project executed if they want to mine some minor minerals from there. That has nothing to do with this, but the authorities have cited somewhere this is directed under Rule 3B or lab. So when we read that provision, we get to know that is actually not applicable to the facts of the case, and there is no royalty payable at all. I mean, no tax on the royalty payable in the asset. What I'm just trying to say, we need to go and understand and read the law which is governing that particular provision also, and any case laws. For the in this regard, already there was a few case laws rendered in the context of royalty things and that mining things, and by the government of I mean High Court of Karnataka. When we referred that, there was an answer for all these questions. So what I was just trying to say that it is not only the precedents under the GS law which we need to be looking. We need to look into the precedents of the relevant law governing that particular businesses. Okay. I think with these things, I will move on to some of the case laws I have listed out. I want to give a background to the case or the rationale and try to explain what actually went on and how that impacts GST or what is the status of that case law under the GST law. You would have heard about the decision of Mineral Area Development Authority versus Steel Authority of India. Actually, let me tell you firstly, this decision is not relating to a taxation of either service tax or for that matter GST. This decision is essentially to decide the power and authority of the state government to levy tax on the royalty. Whether the royalty itself is a tax or a tax on the royalty can be levied, and if so, who can levy the tax? I'm not getting into the too much nitty-gritties of this particular case, but I have to tell you the background, how the industry on this is facing a lot of issues, and which by this decision, a lot of discussion is happening in the industry. Essentially, all these mining industries are required to pay royalty for whatever the minerals which are extracted out of the natural resources. There's also a concept of dead rent. Dead rent is a rent on the land which is allotted or given on lease by the government to the lessee, wherein there will be a, they say, royalty or the dead rent, whichever is higher, they have to pay to the government because it has been already leased down. So in that context, there are a number of cases which are pending before different forums, including Supreme Court, whether tax needs to be paid on this under reverse charge mechanism for the rights given to enjoy the natural resources by the government to the business entity. So basically, even the service tax regime, a similar issue is going on. So now the issue which there is a conflict of views and the matter was referred to uh, constitution bench with 9 members to be constituted, and finally it was constituted, was heard in detail. A battery of senior councils argued the matter both for state government as well as central government. Now, finally, the decision has come out where it says royalty is not a tax, it's a contractual consideration paid. Once the court is saying so, it's a contractual consideration, then automatically the stand which were being taken by many of the industries saying that royalty is a tax in itself. So there is no liability for me to pay tax in the reverse charge mechanism of the same. That argument, I think, is more or less to rest. But at the same time, whether what happens to those decisions which are already pending before Supreme Court, I was given to understand that consequent to this decision, all those matters, uh, especially Udaipur Chamber of Commerce and other matters, has to be heard separately, wherein the tax on this royalty will be argued and discussed. And still, that issue has to be decided. So, from the GST perspective, still there's a possibility that some arguments can come up, whether that will be accepted, not accepted. If so, what are the other alternate arguments? We have to wait and see. Having said that, one more thing, when I was discussing with a couple of advocates, they were telling that they are going to push, even if it is held to be liable for tax, they're going to seek for a waiver of interest and penalties for those things. And also, many of the advocates were mentioning about a revenue neutrality transaction also. I mean, revenue neutrality of the transaction because they were already paid taxes on their final products, and the net effect of the output tax would have in cash would have been much more than the tax that should have been paid on this royalty and the reverse charge. All these grounds they are planning to place before the Honorable Supreme Court, and we have to wait and see how it is going to go further on those aspects. And if so, also there may be representation before the council also to give such waiver. So now, even now, the position is wait and watch with regard to the taxability of a royalty under reverse charge. While reading the decision at para 275 of the decision, there is some discussion as to the scope of entry 49. Entry 49 deals with taxes on land. So where the state government is given authority to tax. So why I'm just bringing out this may have an implication on the service tax. If they say the power to tax land only lies with the state, then the service tax levy is going to pay. So in that context, there were some discussions in one of our professional meetings, etc., with other fellow professionals. When I was reading this para 275, there's one specific mention in that where they define the scope of this entry 49, where they say the tax levied on the activity or a service rendered on or in connection with land and buildings does not fall within the description of taxes on land. So tax on land is an independent, active scope as against aspect as against the tax on the activities carried out utilizing the land or on the land, so is a different thing. So I don't think that this case law would help to defend much on a service tax front as well, except for relaxation for the past. I think this is what was my observation on this particular case law. The next decision I wanted to discuss uh, was Karnataka High Court decision, division bench. The case is that of Rajiv Gandhi University of Health Sciences, where there was already order by a single member in a writ petition, where they had considered the arguments and they have said no taxes is liable to be paid by this university. This is a service tax case on all this affiliation fee, all the amounts which are collected from the affiliated colleges on various counts. And also there is one more aspect over there about the rent collected by these ATMs and other things which were run in the educational institute, in that university for the benefit of whoever comes in, students or whoever it is. So the argument took there was that the exemption of service tax is exactly same as we are seeing in the present GST regime. So there, single member gave a favorable view, saying that firstly, the universities also to be constituted as an educational institution, because all the colleges or the schools are an extended arm of a university, and the university is formulated by an act, and that purpose of that constituting the university uh, and running all those colleges under the umbrella of that university is nothing that it is as a one aspect. They are providing the education to a students, so they are education institution. That is what was essentially the theme given by the single member. The department did not agree on it. They filed a uh, appeal before the division bench of Karnataka High Court. So there's a very good decision to go through that. Various uh, cases in the past have been cited over there. The decision was rendered on 30th July 2024, where they are based on the arguments. Raghuraman sir argued this matter, senior counsel. So, considering all the arguments, they upheld the view taken by a single member as to the proposition that university is also an education institution and thereby they're exempted, not taxable as to the aspect of whatever the amounts collected by them from various institutions, I mean, colleges and schools, in turn, which is effectively collected by the students. So there they continued with the non-taxability of that aspect. Uh, Whereas they said the rentals uh, as given, I mean, rentals from the canteen and other ATM and so banking facilities in the premises, those are liable to be taxed. So that is what the division bench gave a partial uh, relief for the government with regard to the rental aspect of it, but as well as the other aspect of it, they upheld the view taken by the single member in a writ petition. Now, the changes in which are the some of the propositions which are set out in the 54 GST Council. We'll discuss that later. One of the aspects which they have clarified is that affiliation fees by the universities from various colleges are not exempted and are liable for tax. Whereas, and also they say there was a council meeting in 2022 itself, where this matter had come up, and that time itself it was discussed and decided it is not exempted. Now there is going to be a conflict. There is a decision of a high court and there is a decision of a GST council. So there may be, there will be, in fact, in the earlier law, whether the clarification issued by the board vis-a-vis the decision of the courts, decision of the court is going to prevail and not the circulars. And also there they said the power to legislate is with the parliament. So they cannot they cannot give a relaxation or make any changes into it. Whereas court interpret a law and that will prevail was clearly clarified. So accordingly, applying that principle, there's going to be a conflict which will be created by virtue of a latest issue, latest so-called clarification on this affiliation charges. In my view, this issue is going to go up the ladder. It may go up to the Supreme Court, or many other universities may try to knock the doors of the High Court. And also, I want to bring in here, Telangana High Court, if I'm not wrong, has already given an adverse decision on this concept. So there have been two decisions now which are conflicting. How it is going to go, we are not clear. So this issue of the taxability of the affiliation fees will have to be actually again seen and see how it has to be dealt, especially for the past. For the past, they have again not given any relaxation for these universities. They have given some relaxation for the boards, which we will discuss later. One more decision I wanted to discuss was on the aspect of development rights, transfer of development rights in a JDA. In fact, this matter is presently pending before Supreme Court. The High Court, when this matter was brought before the High Court, or challenge before the High Court, the challenge was in a joint development agreement or arrangement. I am a landowner. There is a developer. When I have given a land to the developer, what finally I am going to give away my land. So it is a sale of land, and there is no services, anything called a transfer of development right. The development right is ultimately going to be affected or converted into a conveyance of a land or a transfer of a title to the land, and I am going to give up a land, and there is nothing called a service where I am going to give anything from my end to the developer. So this was a line of argument which was placed before the High Court. The High Court did not accept it. They went through the terms of the joint development agreement. There they said, you are giving a right to develop to the developer today on the date of entering into this joint development agreement arrangement. Whereas the land is going to get conveyed or transferred after having complied with various conditions set out in the agreement or arrangement by the developer. So that is a separate event, separate transaction, different from the transaction of what you are entering today. So what the statute is taxing is the transaction happening today, and hence you cannot claim that it is not leviable to tax. So this is what was the decision which was given by the High Court in Parahita Constructions Private Limited. So appeal was filed against this to Supreme Court, whereas there, no, I think SNP. So where the Supreme Court did not stay the operation of the order, especially the recovery or the payment consequent to that particular order. They said that we are not going to stay, but anyhow, they admitted that particular case to be decided on the further issues. I was given to understand that the industry is already making a lot of representation, and maybe probably in the coming couple of meetings of the council, probably this representation may be considered, and we have to see how it will be dealt with. So this decision is with regard to development rights. There is a one High Court decision of Allahabad where it was the premises was inspected and stock differences were said to have been found, and consequently they wanted to initiate Section 130. There is a confiscation. So it was challenged before the court. The court said, no, you cannot directly initiate Section 130. If there's, first of all, you do not know how the methodology of taking the physical stock, whether there's a machinery available for you to take the difference, etc. So the appropriate action should have been to initiate the procedure in Section 73 or 74 for having taxes not paid or short paid. Having established that, we can proceed further. So not directly in the 130. So here, the point which I'm just trying to bring out here, invariably, I've seen cases, especially raised by the state authorities. They will be comparing the stock balances, financial value of stocks. What is relevant under the GST is not the valuation of stock. Instead, it is the quantity of the stock. The quantity of the stock which should have been accounted in terms of the provision of GST law. If it is not accounted, there is a deeming fiction of a supply which is said to have been made. Even such deeming fiction will result into liability to pay tax for that particular the stocks shortage or whatever it is. So then you have to initiate the corresponding proceedings under 774 with all other evidence to establish the same. So we need to be very careful. And when there's an excess stock, there cannot be even a demand on that, whether excess stock is found, whether am I liable? Excess stock is found, I got a purchases invoices or input tax. Anyhow, if I have not claimed, then there should not be any obligation on me. So there's a little different arguments in case of excess stock as against a shortage in stock. Another judgment of Delhi High Court I wanted to refer with regard to a differentiation between goods and services in case of exports. Where in case of a services export, there is a condition that receipt of money in convertible foreign exchange. Whereas for goods exported, until unless the rules got amended, where they specifically brought out for recovery for a non-realization of the consideration. Till that time, so there was no condition whatsoever for receipt of money towards the goods exported. Especially if you are not claiming any refund because you have sufficient domestic clearances and domestic supplies, hence you can adjust that credit. There cannot be a demand of taxes for non-realization of money for export of goods. The same can be there for services, but not for goods. So that is a one important thing, and this case law supports that particular view. Generally, I will not wish to cite advanced authority rulings, but here I found some interesting proposition. So I thought that I need to discuss this. Here in this case, the set of facts is there was a Indo-Maldives arrangement, there was a agency, NBCC or something like that, where I am in India, I'm supposed to go out of the country and execute that project. But the agency who is allotted that work is in India itself. So the question was whether there will be any liability for taxes on such works executed abroad. I'll repeat the facts. There was an arrangement between Indian and Maldives government in some scheme where there's an implementing agency located in India. There's an agreement with the implementing agency and this particular applicant for going and executing a project abroad. So now the question is whether, since both of us are located in India, whether there is any liability to pay tax on this work which is completely executed from outside India in outside India related to remote. Considering various factors, including the location of the recipient, works contract, place of supply, everything, it was decided that there will not be any tax implication of this. Even though the contracts are entered in India, the payments are also made in India. I think we'll have to see where this decision is going to, I mean, this proposition is going to be, because I feel there's a little of a conflict in section 13, but here in this case, unfortunately, section 12 is applicable. So we have to see how it will be dealt with. I wanted to discuss this recent decision in the case of Indian Medical Association Kerala State branch. Basically, many of us know there is a Supreme Court decision in the case of Calcutta Club, where the principle of mutuality was upheld in the context of service tax law and the VAT. Now, in the context of service tax law and VAT law, when they said the principle of mutuality is going to be applicable, there was an apprehension in the minds of the council as well as the authorities that the same impact may be there even under the GST law. So what they tried to do was they amended the law itself to bring in more clarity to tax the transaction between the association and its members, the club and its members. But the amendment is a little more wider than only covering the club, because it says other than an individual, any person to its constituents, members, blah, blah, blah. So there, this amendment is made effective from 1st of January 2022. Now the challenge was made, but however, this particular provision is said to be operative retrospectively with effect from 1st July 2017. Now, the question was whether this particular thing can be made retrospectively applicable and whether the demands can be made for the past period before 1st January 2022. That is what was the challenge before the Kerala High Court. Honorable Kerala High Court considered all the provisions and the purpose of this particular amendment brought in everything, and has ruled that this amendment is to be applied prospectively and not retrospectively, and no demands can be made for the period prior to the 1st January 2050. I think this is the good way. Then why is it retrospectively? Somebody has already paid tax. They cannot go and claim refund because already there has been made, I mean, given effect retrospectively. But demanding a tax retrospectively is said to be incorrect by this decision. Legally, whether that proposition holds good or not, we do not know. But as of now, this decision is there where can be referred to use to that extent. There has been a lot of discussion initial period of the GST implementation, that My dad, the directors were not available. His DSC was not available. So they couldn't file a returns for various reasons. But however, they were depositing the taxes into their credit ledger. So they couldn't file return for various technical reason or for whatever reason, but they were depositing the taxes in their credit ledger. Also, there were situations where they were not having a full money to deposit. They were having a partial money. They were depositing a partial money into the their credit cash ledger. So it's in such a situation where the interest has to be computed from the due date of filing a return to the actual date of filing a return for the entire amount of the cash, I mean payments made through cash, irrespective of the fact there was already a sufficient balance during in the intervening period. So in this decision, Arya Cotton Industries, it said if already when you are making an interest computation, you need to consider the amount already deposited to the electronic, I mean cash ledger, which is already gone to the government exchequer. So you need to consider that and adjust that, give a credit for that while computing the interest. That is the essence of this decision. Recently, there was a amendment to Rule 88B, wherein they said, I'll read out this provision, provided that where any amount has been credited in the electronic cash ledger, as per the provision subsection 1 of section 49, on or before the due date of filing the said return, but is debited from the said ledger for payment of tax while filing the said return after the due date, the said amount shall not be taken into consideration while calculating such interest. The said amount is lying in the said ledger from the due date till the date of its debit return. Again, there is always when you are giving, you again will not give with the full hands. You will hold something out of it and want to give. So when they wanted to give effect to it, they should be rational in saying, okay, whatever amount deposited, you reduce that. Merely by the fact that I deposited a couple of days later, I should not be denied the interest benefit for the entire amount deposited for the period where the delay filing return. So even this provision, I think, is not giving a full relief. It only giving a relief to taxpayers who are deposited the entire amount before the due date of filing return, but only payment was, only return filing was delayed, or to the extent of the deposit made before the due date. But if the payment was made after the due date and further there's a delay of filing the return, I think then the benefit of this rule is not available. In such a scenario, still, I feel it would be ideal to refer to the case law rather than to the rule. Here, there is a, though I'm referring to this decision, this is a Karnataka High Court decision. I want to bring in this, explain this concept where whom the notice has to be issued, vis-a-vis from whom the recoveries can be made. Under section 73 or 74, for quantifying or determining the amount of any short paid, not paid, excess ITC, availment or utilization, or for that erroneous refund, to the person chargeable to tax. I'm repeating, the notice has to be issued to the person chargeable to the tax. It cannot be issued to anybody else. So there may be a situation where the person is no more existing, or officially and technically that person has become non-operate. He cannot operate at all. He has not at all having authority to operate. So in such a scenario, without giving a notice to the person who was liable to pay, directly going and initiating the recovery provisions contained in section, that recovery provisions is not correct. Where that is what is held here. There are many such applications before, writ petitions before the Honorable High Court of Karnataka itself, where the proceedings are initiated against the directors or proceedings of not recovery. The notice itself to adjudicate is issued to the directors or the legal heir or the successor of the business without first issuing a taking action against the person who was liable to tax. So I think in that context, this decision will be of help. Probably I'm just giving this. There may be similar. There are many similar matters which are coming up before the Karnataka High Court on this context. Who should be taken for adjudication vis-a-vis who can be from whom the amounts can be recovered from. After having determined, you can go for recovery. Without determination, you cannot go for recovery. Is one of the principles. I think I have covered some of the case laws which I thought would be relevant and covered. Any questions on this also you can post in the chat box. I will be addressing those things towards the end. I will quickly run through for another half an hour to 40 minutes on the changes and connected things. Then we can take up the questions which are posed. One of the changes, or rather, sort of a proposal which is there, is amendments to Rule 9610 and Rule 894A and 4B. But exactly, lot of cases are pending before the court on the aspect of this 9610. The issues there are certain notifications which are listed out there. If somebody has availed the benefits of those or supplies under those were not permitted to export the goods on payment of IGST and claim refund on the same. If we carefully see, was there any double benefit? Obviously, no. I think maybe a council or the government have realized it now and said, okay, we are going to omit this rule 9610. So in future, once it's omitted, that restrictions are not all there. And they have said that it's going to be prospective. Then what happens to the past cases? Past cases, they have come out with the clarification because there have been one explanation which was added in the notification wherein they said if somebody has only availed the BCD exemption but not the IGST exemption, it is as good as they would not avail the benefit of those notifications listed in 9610. Which means that, say, I've availed the benefit of that under the IGST. So now this circular which has been issued and the clarification or the so-called relaxation they are saying, what is being said is, if you are able to go and reassess your bill of entry with the customs authority and pay back that IGST amount for which you have taken a benefit along with interest, then your IGST refund will not be disturbed. So restore back the benefits taken in the exemption schemes. So you will be entitled for the benefit of this particular IGST will not disturb you. All those proceedings can be, dropped sort of a thing. Now, I am not clear because in couple of cases when we attempted to get our bill of entry reassessed with the customs authorities, it was not possible at all. So though the government is now issuing a circular, then probably we have to go and try consequent to this, please amend our bill of entry, whether it will happen, procedural hiccups, the limitation period set out in the customs law, all those things can come in a way to implement this particular circular is my personal opinion. I am given to told already the matters have been argued before the Kerala High Court in length. I am not sure whether already a decision is out or likely to be there. The professional committees of understanding or hope that this rule 9610
will be ruled to be ultra vires. If so ruled, then what would be the implication of this circular? And one more question is, when I am going ahead today and paying this IGST on those goods imported, will I be entitled to take the input tax credit on the revised bill of entry today? So all these questions will be practically coming up and how to resolve. If I am permitted to take a credit, which if I had paid that time I was eligible to take credit, why they should get into all these things? They should have simply relaxed on as is basis. I've been generally telling, and a number of cases which are pending before various forums could have been closed. This is my personal view. One more issue which was lingering around was data hosting services, which was provided to foreign entities, where there have been a number of objections or cases, notices, which were raised, saying that it is not export of service and it is liable for tax on three different grounds. Ground number one was it is an intermediary services. You are holding that particular thing, you are facilitating, blah, blah, blah. So so many things. This circular comes out and says, no, this transaction is on a principal to principal basis and on your own account, and it is not an intermediary services. So the first thing they have ruled out. So it's a good relief for the industry person. The next aspect was that some things which they are providing, the data or etc., the software, whatever is placed in that particular hosting center is the nature of goods. So the services you are providing is in respect of a goods. Hence, it is hit by section 13(3)(a). Any service in respect of a goods, the place of supply is the performance, and it is in India. That is what was the argument. So again, that has been clarified to be no, that is not applicable. There is no goods coming in. It is that provision is not applicable. Third line of argument which was being taken by the department in this regard was all those, it's like a rental sort of a thing, that all the facility benefits which were stored over there are in the nature of service relating to immovable property. Hence, section 13(4) is attracted, the place of supply will be within India. Even that is said to be clarified to be not. And they have said it is a export of services subject to other conditions you need to fulfill. So this is one more clarification which has come out. Though I'm mentioning amendment is not really amendment, but the clarifications are in the nature of amendments is how the way things are moving. It is again a clarification, not the real amendment. There was many discussions, doubts as to whether the demo vehicles are eligible for credits, especially in the context of 17(5)(a). Less than 13 seaters, it is a restricted category for taking ITC. In the case of a demo vehicles, whether they are eligible. So what has been clarified now is, see, demo vehicles are requirement of a dealership arrangement. Further, after the demo period, over a period of time, the vehicle will be sold further. Since it will be sold further, it falls into the exception given under 17(5)(a) capital A. Hence, the benefit of input tax is available. So that is what has been clarified. However, they say if subsequently if it is not sold, it is meant or it is started being used for internal purposes, say for transportation of a staff, management, etc., then the no ITC is eligible. When it comes to, again, when it's being used as a demo vehicle, in the books of accounts, there will be a different type of treatment. They may treat as a stock in trade and further sell it, or they may capitalize it into capital assets till the period of usage and subsequently they may sell. Even they say in the period it's capitalized, still if it are meant to be sold anyhow, then you can take a benefit of ITC. But however, you have to, if you are capitalized, it becomes a capital goods. The provisions contained under section 18(3) has to be followed. That is a, per quarterly the depreciation for the credits taken 2.5%. Those things has to be applied. In fact, 53rd GST Council meeting has had proposed to introduce 128A, and that is already been brought into the statute book through enactment, but still has to be given effect to. It is expected that from 1st of November 2024, it will be made operating. Consequent to that, it is said that there is going to be an insertion of Rule 164, which will come along with the forms and the procedures. Not only that, they're also saying that there's going to be a conditions for availing the benefit of this waiver of interest and penalty. On the one hand, the provisions of 128A itself has got certain aspects of it. In addition to that, they have given authority for the government to set out conditions which subject to which the benefit will be available. That will be notified only through rules, which we have to wait and see. So once that comes up, we will have to see how the scheme is going to operate. Practically, we are seeing many cases. In the cases of Junain, where the 70 notices should have been issued, 74 notices have been issued. In such a scenario, how it will be dealt, nobody is clear. In fact, we are pushing for an early adjudication and going to the appellate authority, where appellate authority can convert that 74 notice into 70 notice. Again, the challenge which lies is for availing the benefit of this, we need to pay the entire tax in the notice and not notice or order as the case may be, and not only on an issue based. Part of the issues we can't go and address. Many cases we have found in one show cause notice, some issues are being proposed under section 73, some issues are proposed under 74. So we are not sure how that has to be dealt with. The cutoff date for making a payment is set to be from 31st of March 2025. Notification in this regard is yet to be issued after this scheme is notified. One more major changes which was brought out in 53rd GST Council, which was again in Finance Act 2024, which came into the statute book, was section 16.5 and 16.6. These sections, these subsections, not sections actually, these subsections are inserted with retrospective effect from July 2017, where they want to bring out what I can say, because there have been situations, orders have been passed, many of them have not been appealed. Or wherever the case is live, no problem. In fact, we have been always suggesting that keep the case alive in 16.4 cases. That is what was, unless this particular proposal came in, it would have been difficult for cases where the appeals were not filed to go and ask for a rectification. But the challenge is many cases where the taxes have already been paid and no refund can be claimed. And already paid. Now, if something has been recovered and you're going for a amendment of the order, whether can be said it is paid, whether the recovered can be said to be paid, whether still am I entitled to claim a refund of it, is a big issue, is a matter of debate which will be taken up in the further in the judicial forums. But I think there still lies a little of a problem. Now, what they're trying to say is wherever any orders have been passed for section 73, 74, or not 7 or not 8, obviously tribunals have not come, so that orders are not there. So if any of these orders have been passed and confirmed in contravention of 16.4, but now the benefit that they can claim by virtue of 16.5 or 16.6, I think there is going to be a special procedure. Section 148 gives authority for the government to come out with a special procedure for a class of registered persons. So in that, especially all this, real estate sector, where the land, the time of payment of tax postponed to the date of completion, that notification issued is under section 148. The similar notification will be issued under 148 for for allowing the rectification of orders under which is already in past, which should have been not appealed and would have become final. So I think that is a welcome measure which we have to see, and other repercussions also we have to see how it will be operating, who's going to do that, what time limit they will prescribe, all those things we have to wait and see. When it comes to some other changes or recommendations, I can say for the life insurance and health insurance, uh, there was a noise which was made stating that the rate of tax at 18% is actually excessive. It is for the common, general public benefit. It's too much, so it should reduce. So they have said they will constitute a group of ministers who will study this and submit their report by October 2024. I think they are in a positive mode. We can expect the premium, taxes on those premiums may get reduced. So consequently, the premium on insurances may come down. When it comes to transport of passengers, again, there was a confusion whether it's 5% or other rate of tax. So now they have clarified it will be notified 5% in the past, as is basis, or as is varies basis. So no demands will be made. One more exemption which or a clarification they are trying to give is with regard to flying training courses. In fact, where it is conducted by DGCA approved flying training organization. Actually, this issue was settled under the service tax regime by a Delhi High Court, where they said they analyzed the DGCA rules and they said there is some recognition for the certificates issued by such uh, trainings organizations in the rules. Hence, it is a course recognized by law. So, recognized is different from approved. So, since it is recognized, the benefit of the exemption is available was already there in the service tax by Delhi High Court. I think the similar things are coming out here. We would have read in a newspaper that IIT, ISC, all those been served with huge demands for the grants received by them. Again, immediately that was represented. So there they are coming out and saying that there will be an exemption. We have to see the text of the exemption. Essentially, for the government entity, research institution, university, college, or other institutions which are notified under Section 35(1) of the Income Tax Act will be exempted. Again, past have been are set to be going to be regularized. So no demands on those things. This real estate sector was pushing for many clarifications and many relaxations. I think one of that clarification has come out now. That is this preferential location charges. Though this clarification is in this context, this clarification can be adopted to many other things which are of a similar nature, which are collected together with the by the developers or the seller of the project from the customers. So they have said that this PLCs collected along with the construction services should be considered before issue of completion shall be naturally bundled. The construction should be treated as a part and parcel of the construction service applicable rate on the construction services is 5% or 1% or whatever the rates applicable as the case may be is going to be applicable for this as well, has been clarified. What happens to a situation where if the same thing is collected as a part of, post completion certificate, obviously again they're applying the same rational principle. They're not going to be taxed on that because it's a bundle, it's a composite of that value of the sale of completed. When it comes to this affiliation, we discussed about the case laws of a Karnataka High Court. Here, I am just here. There are two different aspects of clarification. One, the affiliation services provided by educational boards are clarified to be taxable. What we talked earlier was universities. But they are saying prospectively there is going to be exemption for the affiliation services by educational boards to government schools. Private schools, I think they are not going to give an exemption. Then when the past they're saying is regularized as is where basis, which means now again this as is where is basis, there is a lot of confusion whether this has to be applied. This has to be applied for all the affiliation fee or only to the affiliation fee where the exemption is being given prospectively. This type of confusion exists not only in this service, many services where that as is where is basis is to what extent and in respect of what there is lacks clarity. And there have been already proceedings by the department saying that that should be confined only to some extent but not the entire. So we'll have to wait and see again. Clarification to clarification how it is going to be. One amendment in the reverse charge mechanism which they are proposing is to bring in the commercial property also under RCM if it is taken up by a registered person. I am a registered person if I am taking a commercial property on rent. Residential property taken on rent was anyhow subjected to tax under RCM, but now they are adding even the commercial property. They're saying it to avoid the revenue leakage. Where's the revenue leakage? I don't understand. If somebody is really entitled to the benefit of some exemption, the recipient who is not will not pay the tax and will not take ITC. How there is going to be revenue leakage, I don't understand. Especially when that other fellow is going to the business registered person who's supposed to is doing a business will finally pay tax on the final value. If he has paid tax on the RCM, he will anyhow take input tax if eligible. Only where the government is going to get additional revenue is scenarios where till now no taxes were being paid, claiming all these exemptions, and that premises were being used for a non-taxable activity. That may be a very small sector, but by virtue of this, they are putting additional responsibility on the registered person and leaving the owners from the taxation of the act. And if they do not have any other businesses, they can claim a exemption from registration as well. But what is the other side of it? Say, I am running a commercial place. I have rented out my commercial place to various registered persons. I have set up various services in addition for giving this rental. It may be maintenance services, it may be lift AMC, it may be various other services where I am eligible to take an input tax or installed various plant and machinery where I am eligible to take an input tax credit. By making this rental services under RCM, the input tax on all those things will become a cost to the owner, and it is going to add to cost because earlier at least whatever the taxes which I am paying I was able to adjust. Now I am not going to get, so the landowners are going to bear the pinch and their bottom line is going to come down. That aspect of it is not being seen. So essentially, the credit chain is going to break, which is against the fundamental principle of GST law. Import of services by branch office is basically only for foreign airlines. I think I don't want to discuss this, but the only thing what I want to say, why I brought in here is, if that can be applied for foreign airlines, saying that there's no consideration between establishment in India and outside India, why that principle cannot be applied for other type of businesses? Why only for foreign airlines? In fact, there's a discussion on that saying that it's an international practice, blah blah. Then, if the international practice is there for airline business, why not for other businesses? It cannot be applied. I think that is where this matter requires further examination and seen whether some things can be created out of this clarification. Uh, this ancillary and intermediate services provided by GTA, again, this concept is nothing new. It was there in service tax regime. There was a circular which says that all the incidental services in the course of providing the transportation will be a part of the GTA services, and applicable taxes in the GTA services are only applicable. However, uh, one thing which is silently coming out in this clarification is if the services are provided afterwards, not in conjunction with GTA services, or it's not and, or invoice separately, then it will not be treated as composite supply. I think this part of the clarification, which is trying to say, if invoice separately, it would not be treated as a GTA services. In my view, is against the concept of a composite supply. And if everything is going together merely by the fact that for the quantification and identification in the invoice, again, invoice separately has a two different connotation. Separate invoice being raised and separate item in an invoice. So again, there's going to be a confusion, and I'm just seeing that there can be a problem in this area. Uh, there was a confusion in the film distributor with between the rate of tax 12% versus 18%. There were notices issued for few of the film distributors. So to say that it is actually 18% because the wordings, there is a duplication in the wordings in the classification itself. So now they have said for the past, prior to this 2021, after 2021, they rationalized the rate to 18%. Prior to that, they are saying no tax can be demanded as is basis, the cases should be closed. This goods part, I'll just run through it. Only this metal scrap, again, they want to bring in a reverse charge mechanism. And also there is a mention about that anybody who supplies, who crosses a limit has to take a registration. Otherwise, the recipient has to pay the RCM. And also there's something mentioned about the TDS of 2% into B2B supply of metal scrap. Unregistered supply RCM, B2B 2% TDS. So this is what basically this is one of the sector where a lot of tax evasion used to happen, and so they want to curb that as much as possible, and hence these mechanisms are being introduced. I think these other points. Okay. There have been additional work for our fellow members, where whether you will be paid extra fees or not, but you have to do all this work to your clients. One thing they are trying to bring in, introduce on a pilot project for some of the sectors and in some of the states, B2C invoicing, and also for B2C transaction, also e-invoicing, they want to introduce. So they're saying that this will facilitate the customers to check the veracity and validity of the invoices issued to them so that there is no evasion. But I think these are all very huge industries. I don't think they should be looking into those things, but still, it is an additional compliance from the business perspective and the documentation, and there's going to be additional expenditure because they need to incorporate this into the system of even B2C, even maybe we have to wait and see per invoice whether they are going to give some relaxation or what. In addition to that, in the GST architecture, written architecture itself in the portal, they are trying to bring in additional requirement features as a checks and balances. One is an RCM ledger. I think, yeah, I do have details in it. Yeah. Sorry. This RCM ledger, what they're trying to do is because RCM you pay tax at say 100 rupees, but actually you take an input tax of only 80 rupees. There may be a situation where you would have paid a tax in the earlier month, but in the current month you are paying that you are taking an input tax of the same. So the amount in the tables are not matching. That means amount of tax paid under RCM vis-a-vis the amount of input tax taken under the RCM table row is not matching. So they wanted to reconcile that and the extent of the payment vis-a-vis the credit taken. So this RCM ledger, what they are trying to do, similar to your ITC uh, ledger, where IT credit ledger, not the, uh, I mean, the register, where it keeps track of temporary reversal and reclaim from the temporary reversal. Here also the RCM ledger also they are trying to bring in a similar concept. What they are trying to do, whatever the taxes you pay under RCM and the ITC you take, if you avail a short ITC, that extra amount you have paid is going to be sitting into your credit ledger, sorry, RCM ledger. Subsequently, if your availment is more than your payment, that will be utilized, taken out, pulled out from your RCM ledger. If there is anything excess than what you have paid and the balance remaining RCM ledger, then it will prompt that you have taken an excess input tax credit. That is the overall gamut, I mean, overall scheme with which it is being introduced. Now they are giving an option to fill in the opening balance of the uh, RCM credits which you have not availed to be filled in into that particular RCM ledger. So similar to some time back which they had given ITC credit register where you are asked to put in an opening balance. So the same thing they want to make it for this RCM ledger. In case of ITC reclaim ledger, they are reopening for filling in the opening balance and also amending the opening balance. I think up to October 31st, they are given for filling the data and again for amending that up to 30th November. So I think these have been the changes in the portal for these things. And the new concept, they are trying to introduce the invoice management system. In the invoice management system, again, what they are trying to bring in, it was actually originally it was there. I am a supplier, I upload to your portal, and it will reflect in your portal. You will either accept or reject the invoices, and if you reject it, it will pop up to me. All those procedures. Similarly, now the new methodology, invoice management, what they're trying to say is whatever the invoices which have been uploaded by the supplier will be reflected in a draft to be, then you will take that and say accept or keep it pending or reject. If you do not reject or keep it pending, you do not select either of the two, the everything else will be deemed to be accepted and will go and sit into your final GSTR 2B. So this is the mechanism which they are planning to do. And they're making one more changes in the return filing, where that URD unregistered supplies interstate, where from 2.5 lakh limit, they're bringing down to 1 lakh limit. But the functionality, I understand, is not yet live. So the old threshold only you can. I think these are the things as to portal. And as to my last topic for the day is appeals to tribunal. We are waiting when this tribunal will be set up and operational. As far as we had expected at least by 1st October, I think with the present development, no infrastructure being set up, I am not seeing that possibility. We'll hope that it happens as early as possible. That is from the government perspective. What happens from the taxpayer's perspective? Taxpayer's perspective, the orders would have been passed by the appellate authority, first appellate authority. Now, tribunal is not set up. That can only give you relaxation from the period for which within which you have to file appeal. But whether that will automatically give you a right to against a recovery mechanism, answer is no. Any confirmed demand, the tax becomes due on passing of the order. The only, unless it is stayed by virtue of a statutory provision or by virtue of a court orders. So 112 within its subsections has a provision which says that if you make a pre-deposit, further pre-deposit as is set out therein, then the balance amounts stand stayed automatically. So in order to avail the benefit of that particular provision, you are required to make a pre-deposit. Now, there is a circular which is issued 224, where it is given a procedure saying that, and also there is a practical difficulty. How do I make a deposit? Because if I make a deposit in DR03, subsequently when I'm filing appeal, how can I adjust? All these questions were there. So they brought in a mechanism where they said, even if you have made a payment through DR03, they had given a mechanism to transfer that DR0 payments towards a particular order. Once that is transferred or allocated to that particular order, then while filing the appeal, whatever amount has already been shown there as paid against that order will be considered as a pre-deposit. So that is the way internally the system is going to work. Now, what is the circular is saying? If you do not want a recovery action to be taken against any order, you need to do two things. One, you have to make a pre-deposit as per the provisions of 112. Second, not only that, you need to file a declaration or undertaking to the jurisdictional officer, proper officer who has passed the adjudication, that you are going for appeal. You are not accepting the order of filing appeal. If you have not made either of the two, that means you have made a payment but not filed an undertaking, or you have merely filed an undertaking but not made the balance pre-deposit, then the recovery can be initiated. Fortunately, the authorities are not going so much strong on this, but this is what the circular says. So probably we may have to look into all our cases where the orders have been passed, look into two aspects. One, whether any of those orders are covered by this amendment to 16.4, that is 16.5 and 16.6 introduction, or they will be eligible for 128A, that is waiver of interest and penalties, and whether they want to take, and whether all the issues are covered, they want to go in the notice, then go for it, act towards it, or if not, then move towards the present proceedings of what we can say, the paying the pre-deposit. Again, the question is whether the pre-deposit should be 10% or 20%. Already Act is enacted, but that should be given effect to. So we are suggesting that balance of 10% will not additional 20%. So the 20%, 10% can be deposited and intimated is what our suggestion would be. I think with this, I have concluded my deliberation. So I'm open to answer any queries which are raised in the. I don't know how this is going to go. Whether only I need to look into the chat box, or will there be any questions raised openly? I'm not. Kusum, you're
Yes, sir.
there?
Yeah. So one of the queries that I received is we were actually speaking about the reverse charge mechanism in respect of rentals, where the rent is paid by a registered person to an unregistered person and the RCM applicability of the same. One of the questions that is received is, what is the effective date of this compliance? From when?
I think still notification is yet to be issued on this regard. Okay, we're waiting the notifications. But the point is, irrespective of the supplier being registered or unregistered, the recipient has to pay tax in case of a commercial building on giving effect. Probably by 1st of November, they may give effect.
Okay, sir. Thank you for the same. I suppose no participants, no more questions. You have actually deliberated so so I'm looking into the chat box and as such. We will just wait for a few seconds in case somebody raises a query.
Sure. Meanwhile, in the interim, I just wanted to say that this GST law is essentially becoming a council law, not the legislated law. So, but that is how the things are happening. Maybe initial period it is good, but over a period of time until the courts come out and take over, I think this has to be put to rest.
Absolutely, sir. I mean, there are certain amendments, there are certain discussions that happens in the council meetings, and then there are press notes that are released, and eventually that actually, becomes an act, which is not really what is expected legally to be done.
Yeah. I think many a times it becomes like a Chinese whisper. The main provision is forgotten, only their discussion, then amendment to amendment. The purpose for which the original provision was designed itself will be lost. Okay, I think if no
True,
questions.
and they are coming.
Tell me.
Yeah. Sure. No, I think they are released, so that is another big challenge to keep oneself updated. So yes.
Okay.
So Abhi said there are no more questions. I will proceed with the vote of thanks. So
Sure.
I'm delighted to actually extend my vote of thanks, and I am very, very grateful on behalf of SIRC. I take the opportunity to thank you for your detailed deliberation on the various case laws, the curated case laws, which have definitely benefited the members. Also, you have brought about the key highlights of various circulars. You have dealt with various circulars, the clarifications that have been provided with various circulars. You have also spoken about ITC on demo on cars. You have spoken about what is the interest payable, if at all, whether there is any interest payable if taxes are deposited in the cash ledger. You spoke about invoice management system. You have also spoke about the requirement to update the opening balance in the RCM ledger on the GST portal. You spoke about B2C invoicing, affiliation charges, the GST applicability on this metal scrap, about the preferential location charges charged by the real estate developers. You spoke about RCM on rentals, film distributors. The various topics that you have actually spoken about, the entire gamut of circulars that were issued, on 10th of September, you have covered. You have done an excellent job of deliberating. We are very, very grateful to you, sir, for your detailed deliberation. And thanking you on behalf of all the participants and on behalf of SIRC for your valuable contribution this evening, sir.
Thank you,
with
Kusum.
this, I guess we can proceed to close the session.
Yeah, thank you, Kusum, and all the participants,
Yes, sir.
and also SIRC.
It has been a pleasure.